Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VI SBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VI SBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VI SBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Good morning, everyone. Welcome to the VI SBDC's hosting of Pricing for Profit, Factoring in the Island Premium. We've all heard the phrase, the price of paradise. But for island entrepreneurs, that's more than a cliche. It's a line item. Today, we're moving beyond guessing and into mastering the island premium. We'll break down the hidden freight costs, landing expenses, and how to price for true sustainability in our unique Caribbean market. My name is Sharika Industrious Phillips, and I am the Network Marketing Coordinator here at the VI SBDC. To guide us through this, I'm honored to introduce VI SBDC Business Advisor, Mr. Daryl Edwards. Daryl is the managing member of Straight Path Consulting LLC, a St. Thomas-based firm established in 2011. With over 2 decades of experience, he has been a cornerstone for local business development, serving as a longtime counselor and consultant for the VI SBDC. Beyond consulting, Mr. Edwards is a dedicated educator at the University of the Virgin Islands, where he has taught small business management and introduction to business since 2008. His expertise is backed by a powerhouse academic background from UVI, holding degrees in business, computer information systems, accounting, and an MBA, along with a certificate in personal financial planning from Florida State University. Mr. Edwards, thank you for being here to help us navigate the math behind our business climate. And so I'll tell everyone in the audience, here's a friendly reminder to place your questions in the chat, and they will be addressed by the presenting team either directly in the chat or later during our question and answer segment. A copy of today's presentation will be attached to the post survey email sent after this live session. We encourage you to take a few minutes of your time to briefly fill out the survey that lets us know how we are doing. This data is essential to us, rendering these deliverables complimentary to you. So without further ado, Mr. Edwards, the floor is yours.
Good morning, everyone. How's everybody doing? I hope everybody's doing well. Sharika, you basically covered this information in your wonderful introduction. I would just say, please make something available that you can calculate numbers. Some people use a phone, some people use a computer, some people use a calculator. Whatever you want to use something, because we're going to have you guys doing some work as well. I'm not going to be doing all the work today. So let's start off by first defining price. And this is a textbook. This is literally a textbook definition. This comes from the text that we use for Introduction to Business. And it says the amount of money a seller is willing to accept in exchange for a product or service at a given time under given circumstances. A textbook definition. We're going to have a more refined, shorter definition as we go through. And we need to know that there's different methods that are used for determining a price for your products and services. The 3 broad methods. First, you have the cost-based pricing. That's where you determine the price by the cost of the product or service. And this is usually called a markup. You take the cost of the service or product and you mark it up based on the cost. Then we have demand-based pricing. This is unique. You find this a lot with hotels. They'll have one price for in-season and another price off-season. That's demand-based pricing. So the price changes as the seasons change. And then we have competitive-based pricing. You're basing your prices on those of your competitors, or at least you're looking at it and making a determination. What would be a good price based on what other people are charging? Now, my recommendation is that you always consider costs. Even if you don't use cost-based pricing, always consider the costs. Because obviously, if you price a product or service below the cost, you're going to be losing money. And sometimes people purposely lose money, as we're going to see in certain situations. They don't mind if they lose money. Okay? And also take into consideration your competitors' prices, even if you're not using competition-based pricing. Keep those in mind. So what we're looking at now are the strategies. What we looked at in the previous slide was the method. Now these are the strategies. The first strategy is new product service pricing. When you bring a new product into the market, and this is especially true with phones and sneakers, you have what they call price skimming, meaning that they set the price very high. I always thought skimming would be, you set it low, but no, you set it high. You set it extremely high. For people who want to get the first edition of those phones or those sneakers, you set the price very high, and then obviously it comes down. And then you have the opposite of that, which is penetration pricing. You set the price very low to attract people to the product or service. You have differential pricing, psychological pricing. I'm not going to get too deep into them. Promotional pricing. Now, I want you to pay attention to the promotional pricing because one of the types of promotional pricing is what they call the price leaders. These are where, as I said before, sometimes businesses know they're going to lose money on the price that they set for product or service, but the purpose of doing that is to get you to come in. I'll give you an example. Let's say a supermarket has some avocados, and the avocados are starting to turn. It's a very perishable product, so you can't keep them forever. And so they notice that the avocados are starting to turn, and so they need to get rid of them. Let's say normally they sell them for maybe $4 or $5 each, but because they want to get rid of them, they'll probably sell them, let's say, for $1. And so they'll make this big promotion. Our grocery store, we have avocados for $1. Keep in mind they might be losing money by selling it for $1. But what they want to do is they want to get you into the supermarket. Once they get you in, because all you're seeing is $1. And we all know when we go to a supermarket, you come in for one thing, you just want a couple of avocados because you know that for $1 and they're usually for $4 or $5. So you come in, I'm just going to come in and get some avocados. But that's not going to happen. While you're there, you're going to say, oh, I also need some milk and some cheese and some butter and some whatever. So that's the purpose of the price leaders, is to draw you in. The company knows they're losing money, but they don't care because they could afford to lose money on those particular products. And they draw us in, and once they draw us in, they're going to hit us with the more expensive products and services. So, as I mentioned before, I recommend that you always consider cost, regardless of which method you're using or which strategy you utilize. And of course, the only exceptions is what we just spoke about, the price leaders, because these strategies are temporary. The avocados are not going to be for $1 forever. Once they get a new shipment of avocados, they're going to go back to $4 or $5. So it's only temporary. Now, calculating the cost of products and services, it can be very tedious, but it's a very important step. whatever, and keep in mind, suppose you have a business that's selling multiple products. You need to know the cost per each of those products. It could be very tedious, but you got to do it. You got to do it. And sometimes you might have to make some estimates. For example, let's say you're baking cookies. And usually I don't know that much about baking, but I know that when you're baking cookies, you usually don't bake one, you bake a batch. So what you'll have to do is find out the cost of that batch and then, divide it by how many cookies are in each batch. That could be very tedious because you might not use the entire bag of flour. You might not use all of the, whatever ingredients, you might not use all of it. So you have to estimate, okay, this flour is a 1 pound bag of flour, and I use X amount for this batch. So like I said, it's a very tedious process, but it's a very necessary process because you don't want to lose money. You want to make sure your pricing is in line, that you do not lose money. So speaking about costs, for products, the cost of each item is called cost of goods sold. The cost of goods sold. For manufacturers, if you're manufacturing a product, the cost of goods sold include what are called direct materials, any materials that goes into the manufacturing of the product, and the direct labor, meaning all of the labor that goes into each product. Don't forget to include the cost of shipping. As Sharika mentioned in the introduction, we're in the islands, so everything has to be shipped in. Now, there's some differing opinions about how much shipping factors into the price. I've heard from business people, and there's some varying opinions about that. We could discuss that at a later time if somebody wants to. But to develop a good pricing strategy, you have to know the cost of your products. Yes, as we said before, it's tedious, but you have to know it. If you don't know the cost of your products or services, how do you know if you're making or losing money? I have clients who are manufacturers. They manufacture various products. And so one of the questions that I ask them is, what is your cost per? What is your cost per making this wonderful product that you have in front of me? And sometimes they look at me like, oh, I don't know. But you need to work on that cost per. And we at the SBDC, we can help you with that. If you need that particular type of assistance, we can help you with it. So remember, we had the textbook definition of price. So let's look at the more straightforward definition. Price is the amount the customer or client pays for a product or service. That's really the bottom line. This is how, if you want this product or service, this is how much you have to pay. Now, this is very important. When you take the price and you subtract the cost, when that number is positive, you have a gross profit. When you take the price, you subtract the cost, it is negative, you have a loss. So that's why knowing the cost is very important, as you can see. There's a thing called a gross profit margin. It's a very important measure. It measures the percentage of the selling price that is retained as profit after covering the direct cost, which is the cost of goods sold. And this is the formula for determining your gross profit margin. Take the price, subtract the cost, divide it by the price, and then multiply it times 100. Think of the gross profit margin as the amount you keep. For example, if you have a gross profit margin of 70%, that means for every dollar you generate in sales or revenues, you keep 70 cents. And 30% goes to cost. It goes to what they call direct costs. Very important. Please use this gross profit margin to set your pricing. And as you should know, or should be clear to you now as we're speaking, your financial statements are critical because you're going to see all of this information in your financial statements. So let's take a look at some examples. So we have this product. It's a handmade leather wallet. The selling price is $100. That's the price that they set. the cost of materials, we would call this direct materials. They're actually manufacturing these wallets, but this is called direct materials. The materials that goes into the wallet. Leather, the thread, is $30. The direct labor, that's $20. So the cost of goods sold is 30 plus 20, so that's $50. The gross profit, you take the $100, which is a revenue or sales, you subtract the cost of goods sold or the costs, you have $50. That's your profit. For each wallet you sell, you make $50 profit. And your gross profit margin is you take the profit divided by the sales, then multiply that times 100, and you come up with 50%. Now, suppose the price remains the same, but as we know, costs increase. So the direct labor costs increase to $25, and the cost of materials increases to $35. So as I said before, take out your calculators, your computers, your cell phones, and do some calculation. Let's plug in the numbers and let me know what you got. Any answers? Somebody put cost of goods sold would be $60. The gross profit would be 40. They say the profit would be 40. I guess they're talking about the profit. The gross profit margin would be 40%. Another one put that the profit would be 40. I'll see if one more person. Has give your okay, let us move on. Okay, we have one more. Okay. One person said, yes, profit margin is 40. And you have to express it in percentage, it's 40%. And you guys are correct. You guys are correct. You guys who said yes, you take the same information. Remember, the selling price stays the same. You increased the cost of the materials, you increase the direct labor. So the cost of goods sold would now be $60. And so plugging in the information comes to 40. If you could recall, it was 50. So you see, as a business owner, you have to make a determination. There's some businesses, the prices increase and they still keep this, I mean, the cost increase rather, but they decide they're going to keep the price the same. it could be a situation where they know that the people around them are hurting financially. So they say, well, we're not going to raise our prices. We're still getting 40%. Might be a little lower than some people would want. So interesting. Let me see what somebody else put 40%. These are decisions you have to make as a business owner. What am I going to do when the costs increase? Because the costs are going to increase. The daily news, for example, I think the daily news recently went up to $2. It was $1 for a long time. But think about all the years they were charging $1. And the price of paper is going up, the price of ink, price of electricity, everything that is associated with producing that newspaper has gone up, and they still kept it at $1 for a long time. And then they finally said, oh, no, we have to raise it. So you can see that these are decision makers that you have to make. You have to use this information to make your decision. So let's look at a service example, because I know that some business owners have services instead of products. This is a 1-hour photography session. The price is $300. When I first looked at it, I thought it was kind of high, but then it's for 1 hour. So I guess that kind of justifies it. Okay. So the cost, the editing time, is the hourly rate, $50. Equipment and depreciation and software, $20. And the travel cost is $10. Interesting, they factored in the travel costs. And interesting that they factored in the depreciation of the equipment. Equipment depreciates over the years. For accounting purposes, most equipment depreciates after 5 years, 5 to 7 years, depending on the nature of the equipment. So it's not a cost that the business has to pay, but it does affect your bottom line. And you probably have to, at some point, buy new equipment. So it is a future cost. So the total cost, you add up the 50, the 20, and the 10, and you got 80. So the gross profit is $220, and the gross profit margin. So for every dollar that they make, this company is keeping 73 cents for every dollar. And the other 36.67 is going to cost. That's pretty good. Remember the other example was 50%, but now they're keeping 73%. So they have a high margin, they have a very good margin. So suppose again, the price remains the same, but the editing time increases from 50 to 65. Equipment depreciation and software increases to 40, and the travel costs increase to 20. How would that affect the gross profit and the gross profit margin? Okay, somebody says the gross profit margin is 58%. Somebody said 66. So the gross profit will now be 175. And the gross profit margin would be around 58%. Okay. So we got three answers. And they sound correct? Yes. See somebody else put in. Yeah. So you guys are good. These are decisions that you have to make as a business owner. Am I going to keep the price the same? I used to make 73 cents on every dollar. Now I'm making 58 cents on every dollar. Is that acceptable? That's a decision you would have to make. Or you might have to just send out the letter to all the customers. Because of the increases in prices, unfortunately, we have to raise our prices. So this information, use this information to make decisions. Very important. Very, very important. So the question is, what is a good gross profit margin? And the politically correct answer is, it depends on the industry, and it is a correct answer. And it varies by industry. Some are below 30%, which is kind of low. That means you're only keeping 30 cents. Over 60%, you're keeping 60 cents for every dollar you make. Sectors like real estate is 60%, IT is 56%, et cetera, et cetera. I had a client, and because of his relationship with the manufacturer, he was forced to have a very low gross profit margin. The cost of the products, I remember this very well, the cost of the products were like $9, and the most he could sell it for was 10. So he had a very, that's what, 10%? He had a very low margin. And I told him, because I met with him before he opened the business, I told him, well, and it was a very popular product at the time. I guess it's still kind of popular. I warned him, I say, yeah, I understand, it's very popular. So what he was expecting, even though he's only making $1 off of every item he sold, he was expecting a lot of volume. I told him, well, you have to remember you're in the US Virgin Islands. So even though they're keeping the cost at $9 and they tell you can't charge more than $10, you have to factor in the cost of doing business in the US Virgin Islands. And so said, so done. I actually visited his location because I wanted to support my client. And when I went in there, I was like, oh, wow. It was dark. I was the only customer in there, so he probably wasn't getting the volume that he expected. And as expected, he closed up shop very shortly after that. So you have to look, this is why it's good to do this before you open your business. What is my expected margin on my products or services before you go into business? He was hoping for a lot of sales, a huge volume of sales, but he didn't get it. So look at the next slide. And this slide was taken from a company called Full Ratio. I actually have the full list, and I could share it with you guys if you want to. It has a list of almost every industry. Now, that being said, it probably does not factor in the US Virgin Islands. So I think it's useful. I think the information is useful, but since it doesn't factor us in, it might just give us a baseline or give us a ballpark figure, but you'll have to think about it. But I do have the full list. If you wanted, I could easily include it with this presentation. Or you could take a look at certain industries, and it tells you what their margins are, their gross profit margins. And the full list does have practically every industry. And the interesting thing about this is, yeah, I'm seeing some people saying that they want it. I guess I'll just include it. I'll just automatically include it with the copy of this presentation as well. The interesting thing about this is that when I was working with the Small Business Development Center full-time, I'm still working with them, I'm working part-time now. we had an opportunity to purchase this software called, I think it was called RMS. It has a lot of this type of information, a lot of different percentages, and it's based on the population of the area. And we were considering purchasing it. It costs about $200 a year. And we were considering purchasing it. But in the end, we didn't. And the reason why we didn't is because it does not factor in the US Virgin Islands. But the interesting thing about it is that we found out that a lot of the banks at the time were using it, that same RMS software. So they're making decisions on our loans using information that may not factor in the US Virgin Islands. I keep saying I have to ask one of my contacts in the bank, one of my loan officers, if they actually using this or what are they using? Because to me, they should use something that factors in the US Virgin Islands, but unfortunately, we don't have a lot of statistics to offer. That's the unfortunate thing about it, but that's the reality. Okay. So, like I said, I'll include it, and you could keep it if you want. Like I said, it should give you a ballpark figure, but some percentages should vary because we're in the US Virgin Islands. I could send you the link, and I could actually send you the full, it's a PDF file. I could send that to you as well. I thought it was kind of interesting. Okay, so you could see the different margins based on the industry. Okay. So pricing a service, we did touch on that a little bit in one of our examples, but pricing a service sometimes is a little challenging because sometimes it's harder to determine the cost. Because with a product, either you buy it or you manufacture it. And there's an obvious cost, but sometimes with a service, sometimes it's a little cloudy. So I recommend that you consider what I call the repair person model. You itemize your labor and separate that from the materials. If you're a one-person operation, like my business is a one-person operation, you determine what is your hourly rate. What is a rate that you would prefer? If you had to work for somebody, what is the hourly rate that you would want to be paid? If you utilize staff, of course, you have to use their rate, whatever you're paying them. And then, of course, you have to factor in the materials used. And as we said before, it could be very tedious because you might not use a whole pack of paper. Let's say in one of those type of services that you have to give a client, something written, a hard copy of something. You're not using a whole pack of paper for each client, so you have to itemize how much paper I'm using, how much ink I'm using. You have to factor in electricity as well. You should be able to get from our utility company, you should be able to get how many kilowatts per hour was the cost. You need to factor that in. Those overhead costs need to be factored in as well. Some things to consider. The prices need to be increased over time because of the cost increase. As we saw in our examples, you keep the price the same, and the costs go up, you're reducing the amount of money that you're keeping to your company. Some people don't have a problem with that. Some people probably will have a problem with that. Your financial statements will reveal the effectiveness of your pricing strategy. Yes, definitely. You must prepare and review these statements. Even if you are not the one who's preparing them, you need to understand. You need to sit with your bookkeeper, your accountant, or whoever is preparing them and ask them questions. What does this mean? What does this mean? We've covered some of the terms in this presentation, but you still need to know about, this is your business. You need to know, what does this mean? Put it to me in layman's terms. Unusually low prices can raise flags about quality. If the product normally sells for $100 and you sell it for $50, they're going to be like, what? How come you could sell it for $50? Then they might question the quality of it. They might say there have to be something wrong with it. For some people, paying high prices is a status symbol. Some people actually brag about how much they paid for items. I'm not in that category. Maybe one of these days I'll reach that stage, but I'm not in that category. I brag about how little I pay for stuff. And of course, it's important to understand your market when you're developing a pricing strategy. That's why I was giving you the disclaimer about the price ratios for different areas. It might not apply to the US Virgin Islands. You might have the same business. Somebody in the States they have a different market than we do have down here. Now, this last bullet point is very important. In theory, price is the easiest competitive element to duplicate. All a competitor has to do is lower the price. Of course, it can be much challenging for some people, but don't be afraid to have a higher price than your competitors because you know the cost of your items. So let's look at the next slide. And this is taken from Preparing a Business Plan webinar. These are the 7 ways to establish a competitive advantage. Notice the first thing we have is price, and of course is what you charge. But there's other ways to develop a competitive advantage. So what we're saying is that even though your prices might be higher, you might have a higher quality. So you have a higher quality, you charge a higher price. You might have more of a variety. So you might have other advantages than price. So we encourage people not to compete only on price. Please don't just compete only on price. Some people would pay for quality. They know that this item, this product or this service is of high quality. They'll be willing to pay for it. I'll give you some examples, right? These real examples. One of my clients, he came to me, this is when I was working full-time with the SBDC. He came to me and he said that all of the customers are going to his competitor, but he says his products last 4 times longer than the products of his competitor. And I told him, well, I listened to your commercial and no place in that commercial have I heard you, just like what you're telling me now, you need to put that in your commercial. Because if your products are lasting 4 times as longer than your competition, I would put that in my commercial in the beginning, in the middle, and in the end. So people would know, yes, you're paying more because the product is going to last longer. Okay, but I can't remember what he did. Another example is this client of mine, she actually bakes. That's her business idea. She's a baker. And back then, this was like maybe 10, 15 years ago. Well, actually more than that, probably 20 years ago. I was part of this organization and they put me in charge of bringing the desserts. We were having a function. They put me, of all people, they put me in charge of getting the dessert. So I remember I have a client that bakes cakes. So I said, okay, I'm going to my client who bakes cakes. And so I told her, well, I had to actually go to the organization and say, how many cakes should I get? Because, I don't know anything about anything when it comes to these things. So they say, get 2 cakes. So I said, okay. So I went to my client and I said, I need 2 cakes. And I should have asked her for the price, but me, being a dummy, I didn't ask her for the price. So I ordered 2 cakes from her. And then, when the time came, 2 cakes, I picked up the 2 cakes and she told me it's $120 for 2 cakes. Keep in mind, this is maybe at least 20 years ago, close to 20 years ago, $120 for 2 cakes. I was like, it's not that $120 was going to bankrupt me, but it's just that I wasn't expecting it to be that much. But she did tell me during the counseling session that she puts a lot of rich ingredients into her cakes. And so because of that, rich ingredients, not only rich in terms of texture, but rich in terms of price as well. And so since I already ordered, I said, okay, I'm gonna pay her the $120. And of course I took the cakes to the function. And the thing is, yes, I paid $120, which was more than what I expected. But everybody at the function was saying, yeah, man, this cake is slamming, man. It was really good. It was really good. But she charged me $120 without even blinking. She didn't blink. Now, the interesting thing is that when I first brought this scenario to my students, because I always bring these life lessons to my students, back in the day, 15, 20 years ago, they say, "My son, you get ripped off, my son." Man, she rip you off. But recently, when I tell the students this story, they say, well, $120 for 2 cakes ain't really that bad. So it just shows you how the cost of things go up. Because 15, 20 years ago, people say, "My son, you get ripped off." And recently, people say, "No, that's not too bad of a price." Okay, so I'll leave you guys with this. We're going to close with this, right? This is the scenario. You have a retail business, right? And in this industry, you sell widgets. In this industry, most of the businesses, including yours, you buy the widgets for $50 and you sell them for $100. So you have $50 profit. But somehow you were able to find a wholesaler who sells the same widget, same brand, same size, function, everything, the exact same widgets for $25. So the question is, what do? You reduce the price? If so, by how much? If not, why not? What do you do? What do you do? Okay, somebody put answer in the chat. Oh, somebody said they'll reduce the price. Somebody said they'll keep the price the same. Interesting. I'd really like to hear from everybody what you would do. Some say not reduce the price. Some say keep it the same. Okay, let me see how many say reduce the price. We have one reduce, one keep it the same. So one will reduce, two say they would keep the price the same. So I want to keep a little tally. This election year, so we conduct an election at the poll, at the SBDC polling place. We have a referendum. Reduce the price. Now, I lost my track. Okay, let me see if I can keep track again. Reduce the price, keep the price the same. Duh, let's just write it down, right? Okay. So one for reduce, one for keep the price the same. One say reduce, one say keep it the same. One say keep it the same. One say will not reduce the price, so you keep it the same. Other say reduce the price. This one said to reduce the price. Do not reduce the price. This is a tight race or no? I don't know if the election this year can be this tight. Have a limited sale and reduce the price, then bring it. Hi. Wow, you guys are awesome. Lower, reduce. Okay, the idea. Okay, so that's reduce. Seem like reduce can win. Reduce. Reduce. Clearance sale. You guys are so creative. The profit margin increases, then you can invest in the business. You guys are thinking ahead. You guys are sharp. You guys are very sharp. So I'm the chair of the Board of Elections. To reduce the referendum to reduce the price has won 8-4. I think a couple of people didn't vote. Well, actually, the two people that didn't vote is me and Sharika, so I think everybody did vote. So the referendum to reduce the price has passed. So let's take and really there's no correct answer because there's a lot of things we don't know about this scenario. Suppose the business is in trouble, you know, they might not want to reduce the price. There's some advantages and disadvantages of reducing or keeping the price the same. If you reduce the price, you can increase the number of widgets without reducing the profit, can increase the customer loyalty. They say, look, you can increase the sales of other products. Yeah, you could reduce the price of the widgets and increase the price of the other products that you're selling. The disadvantages, the customer, as we said before, they might question the quality. How come you're selling this thing for $75? Everybody else selling it for 50. I mean for 100, and you're selling it for 75. There gotta be something wrong with it. Your competitors might. How come Edwards company could sell this thing for $75, man? And so they might do some investigation, and they might find your source. You may not want to reveal your source to everybody because maybe they're purchasing the widgets from one source that everybody purchases them from, but you happen to find another source. You don't want anybody to find out this source. So, and again, you have to consider the health of the company. Somebody put in the chat, if you keep the price the same, but you have to assume that you're going to sell the same amount of widgets, you're going to bring in more profit for your company, and you could use that money. You could give people raises. All of a sudden, your employees are smiling, and the employees that work for your competitors still have the screw face, but your employees are smiling big because you give them a little something. You see, so like I said, there's no wrong or right answer. But then again, these are decisions we probably would have to make. It's easy to say, well, yeah, increase the price, when costs go up. But sometimes you might have an opportunity to reduce the price. Do you do that? So again, there's no wrong or right answer. So you guys have really been great. I love the interaction. I love the ingenuity of you guys. You guys are on the ball. If you need to contact me, if you need assistance with helping determine your cost per, or helping you determine your price, or any other thing, you could contact me through the VI SBDC, or you could contact me directly. That's my cell number. If you call me and you're not a client of SBDC, I'm going to send you back to SBDC to register. Just know that. So it might be better to contact SBDC directly. But if you contact me, yeah, I'll still send you to SBDC. So I'm done. Any questions? See all those hands up? I have a lot of hands. I have a lot of questions.
All right, Mr. Edwards, thank you for that. I see a round of applause. I don't see any. Okay.
Well, yeah, applause. I think somebody has a question.
Yeah.
Miss Nazalima. I think she has a question. Yeah, she has her hand raised.
Okay.
Yes, good morning. And is it still morning? Yes, good morning. And thank you for the presentation. So I'm a farmer.
Okay.
And I wonder if you can talk some about how some of this pricing works with produce. I was looking to see what category it would fall into, like consumer goods, but just wondering about, are there any special documents or information you can forward to me about how to deal with pricing of produce and agricultural stuff?
Pricing of produce. I think if I remember correctly, I think Shay is on this call as well. She might have more information than I do, but definitely you take into consideration your cost. Now, it's going to be very tedious because you actually you are a manufacturer.
Right.
So how to determine your costs, you may have to consider, you do have to factor in cost, but you may have to also consider the competitive pricing as well. Because if everybody's selling your product, unless your products are extremely rare, if everybody else is selling whatever products, you might want to sell around the same price. But to determine a cost for farmer, it can be done. The labor that you put into to the plant. Now, again, you're not planting one, let's say tomato, you're not planting one tomato plant, you're planting a bunch of them. So how much labor did you put in? How much water did you put in? Like I said, it's very tedious, but I think it can be done. But I still would encourage you to consider competitive pricing.
Right.
And I don't know if Shay would have any additional information.
Hi, good afternoon. Hi, Daryl. Yes, we
Yeah.
do. And actually have recorded some. We had late last year a whole series of videos on produce pricing and profit and loss and all of that things that I can direct you to. So you can contact me here. I can send you the link
Okay.
to the information, but it does. And it is also tricky because whether you're selling it by pounds,
Mhm.
whether you're selling it by bushels. So it just depends on the market and where you're selling your tomatoes, your produce at. So, but I do have the information and you can contact me too on the SBDC as well. And I'd be happy to share that information with you.
All right. Thanks a lot, Shay. Appreciate it.
Yeah, thank you. That's very good information, very good question as well. Because it is really rather tedious to try to determine a cost per for think of what you put in. You put in labor, you put in equipment, but how much of the equipment are you using for this batch of plants? So it could be very tedious and time consuming. So we really appreciate that, Shay. We really appreciate that. Any other questions?
We don't have any other questions as yet, but I do have someone in the audience, and your name appears to be iPhone. If you could message me directly so I can make sure that when I'm emailing the copy of this presentation, you receive it. So you can just put that in the chat. And so, in the interest of time, I guess if you need more time to type your questions in the chat, you can continue to do so. But I guess I'll just navigate to the next slide and share resources so you can know how to find us. Alrighty. So I received your name. Thank you for that. So the VI SBDC has so much more in store for USVI businesses. You can visit our website at www.visbdc.org. Follow us on Facebook, Instagram, Twitter, and subscribe to the VI SBDC YouTube channel for new uploads of our webinars. We encourage you to download the VI SBDC app from the appropriate app store for your device. It's complimentary, so there will be no charge. And so with that being said, I'm going to go ahead and share my screen, and I'm going to navigate over to our website so you can be able to find the Agriculture Business Center as well. So when you go to our website, just make sure nothing is blocking. This is how you basically sign up for services. You can select contact an advisor and follow the prompts. When it comes to the Agriculture Business Center, you can go under the SBDC services drop down and you can select VI Agriculture Business Center, and you can schedule a consultation and you could sign up to be a client here as well. Right? So let me go back. All right, so with regards to training, because I did have a few emails about accessing this presentation, this webinar after the fact. So I'm going to show you how to get there. So go to training, there's a drop down, select events, and then you end up on this page that basically highlights a few categories with regards to training and our in-person event that's coming up in May with regards to government contracting on both UVI campuses within the territory. So we want you to sign up for that. And what you would do is select this button right here, and it takes you to the training portal. So with regards to past tense events, things that are already happened, I want you to pay attention to the type right here, and you can go ahead and you can select on demand. Make sure you do all so you see every center. And when you hit search, then everything that's pre-recorded is going to end up here. Now, we just closed off the quarter yesterday, so all of the webinars that was in this section are now on the YouTube channel, but moving forward, today's webinar will be there. So just give it about an hour, and then you'll be able to go ahead and watch the pre-recorded format over and over again at your leisure. So I do want to make mention of a few events that we have coming up next week. April 8th, we have SBDC Advisor Daryl Edwards. He returns, and he continues on Island Economics, Mastering Cash Flow in the USVI. We have Merchants Commercial Bank on April 9th. They're going to be talking about Small Business Accounting 101. We have Popular on April 13th. They're going to be discussing capital and credit, positioning your business for local financing. We have Wayne Huddleston from the SBA on April 14th. He's going to be doing the 5 C's of SBA loan eligibility. On April 15th, we have the USVI EDA, and they're doing a deep dive into their funding programs as well as the SSBCI program. On April 16th, we have Merchants Commercial Bank returning, and they're going to be doing a session on mastering business finance, loans, banks, and beyond. On April 21st, SBA Senior Area Manager Wayne Huddleston returns. He's going to be speaking to business resiliency as disaster preparedness because we're getting ready to approach the hurricane season. On April 22nd, we have VI SBDC Advisor Daryl Edwards, and he is going to be closing off Financial Literacy Month with Blueprint for Success, a practical guide to writing a business plan. And so anything you're interested in, please go ahead and register in advance so that we can you can attend. So let me just stop sharing. And I'm going to go back to the chat to see if we have any additional questions. And we do not. All right. So I guess everything was clear and everyone received the information well. So Mr. Edwards, I look forward to getting that email with the copy of the presentation. He said he's going to add the attachments and the possible links in there, so it will be clickable for persons to get that information. So no more questions, just persons saying thank you. So on behalf of the entire VI SBDC network, compliments of State Director Ms. Karen Jones, we thank you for your time and attendance, and we wish everyone a productive rest of day. Bye, everyone.
Bye. Thank you.